guys all get that little pop-up that says, do you accept? So if you have a property that you want to underwrite, it's a 2 to 20 unit property or somewhere about in that range, we'll take a look at it. If not, I've got one that we can look at. But the QR code, the slide you're looking at here, that'll take you to all the products that we use or who are sponsors for the Wheel of Cash Flow. We've been giving away some prizes here. And I think this week, just because you're here, we're going to do, we're going to give something away. I don't know what it is yet. Because when we promoted this stuff on social media, there was no like, hey, you've got to like this post or whatnot to register for the thing. So, I think we're just going to go with it. Next, got a few people in the waiting room here. Admit. All right. So, quick question. Let's, I'm going to go through this, slide deck. Some of this you guys may not know about me, but,
and plenty of uncontroversial.
Brian, if you could mute. Unless you were trying to talk to me, I don't know. It sounded like it was a background noise. But anyway, let me get my little cheat sheet here. All right, guys. So this is about me. This is my family. The most interesting about me, and some people don't know this. I don't know why I don't tell this a whole lot, but my wife and I actually met as we were contestants on a reality TV show. Now, this was back in 2008 when this all went down. And we've been together ever since. That's our 3 kids. This picture was taken at the top of Anakista. If you've ever been to Gatlinburg, this is where we had W2 CapCon earlier this year, about a month ago, actually. So I am a financial freedom achiever, real estate investor. We live a nomadic lifestyle, so we travel around with those 3 kids. And days like today, they are pushing our limits on testing us very, very much. But here's a little snapshot of my timeline on kind of how I got there. I was forced out of the W2 world. Luckily, we had been investing for the previous 8 years. And if you hear my kids screaming in the background, that's what that was. Amazon #1 best-selling author. But none of this really matters except for kind of my experience. And I want to kind of share with you what our portfolio looks like today, kind of give you an idea of why I feel like I'm justifiable to share this information with you guys. So here's what our current portfolio looks like. Now, there the 2 loans at the very top, the private, where we were private lenders, those actually went full cycle last week. And so that's a little bit outdated from last week. But the more important thing is here's our full cycle positions, that properties we've been a part of, either as sole owners, joint ventures, general partners and limited partners, kind of give you an idea of my experience. And so there are a few of you in here today that I don't know. And so if you can just drop in the chat where you're from, love to know kind of where we're looking at. And also, this would be a good time if you have a property. Hannah, I know it's 8 p.m. where you're at over there in Germany. Glad you joined us, by the way. If Jeff's in Georgia, Germany, yep. If you have a property you want to underwrite, drop in the chat. We'll do that. Dustin's in Birmingham. I know Dustin. Hello. Nick's in Illinois. Jose's in Boston. Okay. Jack, email me property. All right, I'll go find it. Grant's originally from Florida, but currently live in Atlanta. All right. Mandy, South Missouri. Awesome. All right. Rockwall, Texas. Somebody else is from Georgia. Jeff, how close? What part of Georgia? You and Grant might be neighbors and not even know it. Of course, Atlanta's a big place, right?
I also use Atlanta as kind of like a waypoint. I don't really like live in Atlanta. Kind of an hour outside of Atlanta.
Yeah. Well, you know the Jeff's in Sugar Hill. Okay. Well, you know Atlanta's an hour away from Atlanta. You know, I mean that's kind of the running joke. I hate driving through Atlanta. We have to do that quite often when we go see family and whatnot. All right. Well, I'm finding this property that Jack sent over. I'm curious, everybody, what's your investing experience? Beginner, intermediate, and you can put 1, 2, or 3 in the chat. Just kind of helps me know who the audience I'm talking to today. And I'm going to go find Grant's a beginner, Jeff's intermediate. Intermediate. Awesome. 22 units. All right. Jax is 2.5. So does Hannah, 2 to 3-ish. What does that mean? What does that mean? Either you've done 10 transactions or you've done more than 10. What does that mean? I like it. I'm just messing with you guys.
Are we counting LPs?
Yeah. Yeah, it adds to the
Oh,
experience, right?
okay. You put me down for 3 though. But it's not that hard to wire money.
No, it's not. It's not. But there's a lot that goes into before you hit the send funds, right?
Fair enough.
Yeah. Brian's 40 transactions. Awesome, Brian. All right. So let me figure out how to get this. I think I just got to stop sharing and go to the next one, right? Oh yeah, I got to do this real quick. So disclaimer, you guys want to see this, or you probably don't want to see this, but my attorneys want you to see this. This is a disclaimer. You take a screenshot if you want to. Nick, closing my first investment property Friday. Congrats, Nick. Yeah, man. It's a big step. Big step, man. We'll look forward to seeing that official close notification in the W2 Capitalist community, man. Let remind us on Friday. But this is typical disclaimer stuff. I'm not a CPA. I'm not an attorney, none of that stuff. Every investment carries risk. Make sure you know the investment. Of course, we're not selling anything here or showing, we're just showing properties underwrite it, but just stuff my attorneys want you to see, right? Real quick, we've got quite a few people on here that we recently did this exercise. Quite a couple of you did it. I'm trying to see who all was at Capcom, and Nick is the only one. Okay, so this may benefit a couple of you. So I want to go through this real quick, and then we'll get to the underwriting. Recently is impressed upon me about growth friends versus maintenance relationships, right? And for the sake of this exercise, we're going to talk about what a growth friend is and a maintenance relationships, and everybody that you come in contact with falls into one of those two buckets. There is no middle ground here, right? And this is kind of a different version of the old saying is you're the average of the 5 people that you hang around with, right? So growth friends are people who motivate you. I think I have this on the next slide, right? Yeah. So they motivate you. They are hungry to grow their wealth, right? They're doing great things in life, and they hold you accountable because they want to see you succeed. Okay. So think about growth friends. Those are your criteria, right? For the purpose of this exercise, everybody else is a maintenance relationship. Okay. So be thinking about that. And here's what I want you to do is grab out your phone. And I want you guys to do this exercise while I'm getting this property ready that Jack sent over. Get out your phone, go to your most recent phone calls, right? Whether somebody called you, you called them, and look at the top 30 calls, your most recent calls, and just write them down. Is it a growth friend or is it a maintenance relationship? And I'm curious to see what you guys, I'm going to ask you later, but why just take a couple minutes while I'm queuing up this property that Jack sent over. And go through that exercise. I should have said, hey, get out a sheet of paper, but I think you guys got it, right? All right. And we're gonna circle back to that here in a minute. All right, share this screen. Okay. I got to get rid of some windows here. Spam from wholesalers wanting to buy. All your phone calls are spams from wholesalers wanting to buy your properties. Almost all contractors. That's good. That's good. The growth friends. That's good. That's good. I was going to say, if you don't comment that you have growth friends, then we're going to assume you have maintenance. You're heavy on maintenance relationships, but that's not the case. We'll come back to that in a minute. Let's get to the underwriting. I've got a couple of opportunities up here that I'm gonna take off just for a minute, just to kind of clean stuff up. Matter of fact, let me do this. Let me bring this up, guys. I appreciate your patience as I look like I'm a newbie on Zoom.
Yeah, we've all been there.
But why? I'm on it every day. All right. So this is DEALCHECK. This is what we're going to use to underwrite properties. It is a very good, what I use as a napkin test is I'm a 1% rule. If it can pass the 1% rule in the napkin test, then I typically take it to this calculator, especially if it's something I'm going to tackle on my own. Where, you guys have probably seen these massive spreadsheets that are coming to play. We haven't used one of those yet in here. They're a little bit more involved. We can't really get through that in about 30 minutes. I'm not that good at it just yet. And so I'm a little nervous on trying to demo that with you guys, but maybe we'll get into one as we continue to do this. But those spreadsheets really come into if you're raising money and you want to implement some sort of GP LP split, or do a syndication or whatnot. It allows you to do those things. DEALCHECK does not allow you to do those things just yet. I don't know if they're in the process of doing that, but I love it as a kind of a middle ground because of how quick it is, and it makes me think, okay, if it hits my personal criteria, then I'm going to take it over to the spreadsheet and spend a little bit more time on it. And so one of the things when you log in, this is basically the dashboard, right? When you log into DEALCHECK, I've never used the BRRRRs or the flips or the wholesale. I don't have any experience with that. So we're going to look at the rental properties. And one of the things I love about this system is just the purchase criteria, right? You can come in here, and I've dialed this back a little bit to select just for our underwriting purposes today, or during these calls. Just a couple of them, right? So I've got the 1% rule, 50% rule, cash flow per unit. We're looking at $100 per month. We're looking at an 8% cash on cash return. And then the other thing that we're going to look at or look for is a 1.25 debt coverage ratio. All of these can be selected at any point in time. We can edit them later, but I'll show you how these come into play here in just a minute. So we're going to go to properties. And once again, I'm going to move this Zoom window out of my way. See if I can minimize it. All right, Jack, you're going to be in the hot seat, man. How well do you know this property? Or do you?
I ran the numbers quickly and it totally didn't work for me.
Okay.
I'm gonna see if maybe I have some magic stored up in there, Jay.
I looked at two this morning and they didn't work for me either. I'm like, man, and one of them is right around the corner from one of the properties that I have. Mine's a fourplex. Theirs is a fourplex. And I looked at the purchase price and I look what he was getting. He's getting less amount of money for rents. And I see the purchase price and then I am, and I see the purchase price. I'm like, all right, I'm adding this to my alerts because I want to see when that thing goes pending. Because if he gets what he's asking for, or she gets what he's asking for, my property's going on the market. I don't care about prepayment penalties or anything. It'll be a good deal for me. All right, so this is 3330 Greenfield.
And this is it's a really nice area.
Royal Oak or Dearborn?
That's gonna be Royal Oak.
Okay.
It's a really great location near a real big hospital.
Okay.
I reached out to the broker and I said, hey, love the property, can't make the pricing work. He wrote, welcome to my life. I'll reach out if anything changes.
So frustrated realtor there. All right. So found two different properties. So one of the things when DEALCHECK does this import of data, it goes and it looks at the county records. So sometimes county records, you'll see a property, when it's multifamily, it'll have the individual units listed, right? What are your, So Cynthia, these are primarily my purchase criteria that I'll use for a napkin test, $100 per door. The DSCR or debt coverage ratio is 1.25. That way I know I can get financing on it. 50% rule, I use it just for this calculation, just to make sure I know I'm in the ballpark, but we're going to target once it's stabilized, around a 40%, probably 42% expense ratio. But let's see.
What's the 50% rule again?
50% rule is basically half of your income covers expenses and half of your let me just go to this. Let me show you. And show you. I wanted to highlight a thing on DEALCHECK here. So if you don't know what a rule is, you can go and they've put these little, you can hover over and they contain the exact definitions, right? So operating expenses, the way they define it, operating expenses is less than or equal to operating income divided by 2, right? So think about your operating income, which is going to be, rent. You may have some pet rent. Jack dropped off. Hang on. You may have pet rent. You may have, a laundry facility that's generating some revenue. So all the revenue that's coming in, and divide that by 2. Will that cover your operating expenses? Right? The 50% of your operating expenses. If it does, then you should have enough to cover your mortgage payment and make a little money, is basically how I interpret that, right?
So
Does
it's
that make
those
sense?
3, the 50% rule, yes, the DSCR and the cash flow of at least 100. Those are your top 3, your napkin criteria.
Yes, those are the 3 that I can typically do in my head. And I misspoke when I said DSCR. I was in the lending world in my brain, but it's really debt coverage
DCR.
ratio. Yeah.
Yeah. Okay.
Question.
Same
What's
thing,
the 1%
right?
rule?
Yeah.
Yeah. Okay. So
Thank you.
add property. You bet. Greenfield Road, Royal Oak. All right, we're going to just choose one to import. All right, we're just going to look at this. Jack, do you remember the purchase price off the top of your head? You're going to help me out here? 4 million. Oh, wow.
Yeah, 4 mil.
Okay.
That's part of the reason why it didn't work.
We're going to assume the tax amount is accurate. We're going to assume
there is a pro forma there with some information if you have it.
Okay.
Otherwise we can assume stuff.
Is
I'm
this
okay
the
with
picture?
assumptions.
Yeah. Is this a picture
Yeah,
of the
that's it.
building? Okay. Make sure we got the right one. So we're going to save it. And the first thing I'm going to do is we're going to go to the property description. We're going to change this because this is an entire building. And then we're going to change it from commercial to multifamily. For whatever reason, it just imports it into multifamily, right? And then we're going to edit the unit spaces. And this one is, let's see. $22 units. Does it say the makeup in the pro forma?
Yeah, I think it was like 10 two bedrooms or 12 2 bedrooms, 8 single. And
I
then
don't see the pro forma.
yeah, there it is.
Here it is.
12
Okay.
2, 9 1, and 1 studio.
Okay. So we're going to change this mix up. We're going to do, let's say 12 2 bedroom. Any idea what the rents are for that area?
We can go with $1,400 for the 2 bedroom.
Okay.
And then probably 1,000 for the 1. And then maybe 850, 900 for the studio.
9. We're going to assume they have a full bath in the in there. And you said these are closer to 1,000?
This is the 1 bedroom?
Yes.
1 bedroom, I would say probably 12.
1,200. Okay. I'm going to show you a way we're going to justify that here in just a minute. Oh, 1 studio. Okay. Probably an office at some point in time.
Probably 800. I'd say 850.
850. Okay. 21, that adds up to 22. So one of the things that I use, sometimes I'll use RentCast, which is an affiliate or a sister company, I should say, of DEALCHECK to look at properties like this. sometimes I'll use a rentometer, and if I'm not used to the area, I'll use both, right, just to get a good idea. But because Jack knows the area pretty well, we're just going to
You
trust
could
but
verify me.
verify.
Yeah.
It was
And if it
didn't
works,
feel right.
I'm going to syndicate it so everyone can drop how much money they want to put in the deal in the chat section.
Yeah. All right, we're just gonna choose 2-bed, 1-bath. I'm gonna do a quick analyzation. Average 1470. Well, we have 1400 for those. Yep. So we're gonna be a little conservative and leave it at that. Got a 1-bedroom, 1-bath, 1149. I'm gonna drop it down just a little bit. Say 1150 because we want to live on the edge, right? And then a studio. That can't be right. That went up. Jack, I'm
Yeah,
gonna
you're
go with
probably
what you said.
You're probably safe
850.
with 850. Yeah.
Yeah. All right. So notice I don't have to tap save or anything like that on this. It just automatically updates. We're gonna go back. One of the things I love about DealCheck is when you're underwriting your deal, there's that little red. It's either going to be a red X, which means it does not hit all of your criteria, or there's going to be a green check mark, right? And if it turns green, that means you've hit your criteria, but we're not done putting our information in just yet. So we're going to go to the purchase worksheet. This is probably where the realtor was getting frustrated. Is there anything that we have to do to get this property up to market rent? Is there any value add here, Jack, or is it good to go? I don't know how
Ooh,
updated that picture is.
You're asking hard questions. It's probably in there. Let me just look quickly.
Okay.
It's an email here.
And while you're doing that, I'm going to kind of go through what we've got here on our purchase price. We're assuming it's going to be a commercial loan where we're going to put 25% down, 75% finance. We are going to do amortization. We're not going to do interest only, although we can play around with that if we want to. Interest rate's probably going to be closer to 6.5 or 7 than it is 6. And we're going to assume that our banker came to us and said, hey, we can only do a 20-year amortization, but because you guys are such good negotiators, you went back and said, nope, I got to have it at 30. And you guys settled at 25. And that's where we're at.
I don't want to talk out of term here, but I think that on a bigger loan like this, you probably get the rates closer to 6, if I had to guess.
Yeah, well, you're right. With a 4 million, with a 4 million, if you go the Fannie Freddie route, you might even get a little bit lower than that. So thank you. Yeah, you're absolutely correct.
And it seems like some are already rehabbed and some are not. So just checking.
Okay. So we could do it as is, right? And let's just assume you're not going to make any changes to it whatsoever. Which is some folks' strategies, right? They come in, they take it over, and then as units turn, I think I saw somewhere where it was 100% rented, or it could have been another property I was looking at.
Yeah, it's currently 100%.
Okay. And so, one strategy could be coming in and where you're not, you may be okay with that. You may be gradually going up with rents, so tenants don't move out. But then when they do, then you take the time to renovate those units or whatnot. So there could be an option where you're not doing a huge CapEx at the very beginning, right? Vacancy rate, Jack. What do you typically do for vacancy rate?
I don't own any buildings, but I would probably like say 5 to 7%.
Okay. Well, 10. I used to do 10, and now I kind of drift back down to 7. We don't have an itemized expense sheet, do we?
I think they did have I'm just looking at the pro forma here. Yeah, so the current gross income is 330. They only have $5,000 for management, which is probably way too low.
Yeah, that's
probably put that probably in 8%. Real estate taxes they have here is $44,000, but they estimate it to be 52 and going forward. Insurance they have estimated at 10 grand.
10 grand
Utilities,
for the year.
yeah. Utilities they estimate 22 grand. Fire lawn and snow, another 10 grand. Legal and accounting, $1,500. Another 500. For other stuff. What do they have for maintenance here? Maintenance for 10 grand seems a little bit low, but I guess we can try that.
Yeah, that's pretty low. Typically there's a sliding scale. Like I noticed in the email, it says fully renovated. But to me, that picture on the outside, that's not fully renovated.
Yeah,
You know, those
probably a lipstick
windows,
situation.
yeah, those windows, they look like single pane aluminum windows that are gonna not very energy efficient. So hopefully, you know, the tenants are paying an electrical bill, but also at some point in time they're going to start leaking, and there's going to be some capex that are going to have to go in there. And so typically what I'll do is I'll kind of judge if it has been recently renovated, then I will lower the maintenance and lower the capex expenses, right? But if it hasn't been and it's an older building, then I'm going to move those up. And I don't know why this keeps, I think there's a ghost in here messing with my thing. So I would put older building, I would put 7% of capex. Maintenance, maybe we underwrite it at 5 just because it says it's been remodeled, right? But your due diligence will tell you if that is correct or not. No HOA fees, I'm assuming. Utilities, does the tenants pay all utilities, or is the landlord expected to?
They had $22,000 a year there, so I assume there's a significant amount of landlord something.
Yeah.
Maybe we can institute REBS or something.
Yep. It's a good value add, right? So we're gonna monthly. What about landscaping?
I think they had 1,500. Let me double check.
A month or for the year?
No,
should be for
yeah.
the year. Okay.
Maybe 5. Yeah, it was 5 grand for the year. Lawn, snow, landscaping.
Okay. By the way, if the number usually ends in 0, that usually means it's a guess. They don't.
Oh,
really
absolutely.
All right. So we're going to go back. We're going to look at this appreciation. So now we have our itemized expenses, right? We've got our appreciation and 3% income. And these are long-term projections, right? Appreciation, income increase, expense increase, and our selling costs when we plan to exit the property. We do want to add depreciation if we can, just to get a clear picture. Do you know how much the land value is worth that the property sits on, just the land?
No, I'd be lying if I said that.
Okay. So we're gonna take off that just depreciation deduction. Okay. I think we've got not a lot of photos were pulled in. Got the map where it is. All right, so let's look at it. Yeah, it's ugly. You can own this for $5,000, losing $5,000 a month. Make sure everything's correct. I just want to.
Yeah, Jack, I'm wondering how much is it per door? And what are the comps?
It's 4 million divided by 22.
Yeah,
That's like 83 something.
4 million divided by 22, 181. Yeah, a little less than 200. What are comps for that market?
To be honest, on multifamily, I
door.
can't tell you. I can't tell you
Yeah,
multifamily. I'm primarily in the single family in that area.
Yeah, that's something that I would look at. And is this Class C? Class C, Class D?
No, that's probably between A and B. Or B, yeah.
Oh, I guess
It's not
the picture just
nicer
makes it look
stuff.
kind of old. Yeah.
Yeah, I don't know
Yeah.
where they got that from.
1960.
If it was
That
built in
would
the
be
60s, it's gonna
C, at least
B
C.
minus to C plus if
Yeah.
it's got
Okay.
some heavy left on it. Yeah.
Hmm.
It is, the interior was redone and it's in a great location.
Okay.
Hmm.
I mean, I'm not trying to lose you $5 grand a month. I'm just telling you why it's attractive to me.
Yeah. Yeah. The location, that's the number one rule, right? Location, location, location.
How long has it been on the market?
I just got it sent to me last week. I'm not sure. That's why I didn't
Right, so-
really dig too deep before I started with the negotiations.
Yeah. So Cynthia, you were asking about comparables. And so what this is going to do, there is a comparables section in DEALCHECK here, but this is going to compare
It's
like,
different. Uh-huh.
yeah, it's kind of goes off the square
Yeah.
footage. It's not like commercial versus commercial. So it's kind of hard to do that. Rental comps and rent, to get back to that 1% rule, Hannah, I agree with you. That price is outrageous, but if we got closer to average $1,800 a month in rent, then it'd probably be a little bit, worth looking at. I'm always curious, this offer calculator that is built into DEALCHECK. I love this. We can tap on it. And okay, based on our criteria, what is our highest offer, right? So 2.1. That'll put us in the green. Let's save the new price. Click save. Now we've got our check mark up here. Now it's green, right? And so let's look at our buy and hold projections. I think looks, why we're actually cash flowing about 50,000 a year, right? So Jack, I'm with you. It does not make sense at 4 million.
It was being marketed as a fixed cap, or like a stabilized fixed cap.
I think when we had it at 4, it was a 4 cap, I thought, right? Yeah, 4.3. And so that's why when you look at these pro formas and analysis, they don't always tell the truth. There's something, I don't know how they get them. And of course, we ran through this really quick. Maybe if we dove into some of the expenses and everything fast, maybe if we dove into them, took a little more time, we got out our fancy spreadsheet to do, we're going to bring on some partners or whatnot. We might could get it to a 6. I highly doubt it. A lot of times when I look at brokers offering memorandum, they're not accurate, at least to the way I underwrite it, right? So yeah, that's what if you went back and offered them 2.1?
2.1 cash. Here you go, folks.
Yeah. It's interesting. I am curious. I want to see what this would look like, but if we hit the 1% rule, how would that change?
2.8. Maybe like what, 2.8 or 3?
I don't know. Let's just play around with this real quick. Let's go to, did I do that? No, not 44.
The current rent roll is 28,000.
Yeah.
So the 1% will be 2.8. Yeah.
Let's take, just for fun, I'm going to take these off. I can go back and add them later, but we're just going to say we've got 22 similar units. We don't really care what the mix up is. And we're going to do $1,850 per unit per month, right? Because the average cost per door was $181. let's just see how close we get to the 1% rule. Probably not. Pretty close. Pretty close. That DCR, your 1.25, that's going to hurt you on financing. But Jack, if there's any chance you can go up in about 50% of the current rents, you might have yourself a deal.
I was able to do that. I just double all my current rents and just go to the beach.
Yeah, man. Yeah. So I don't know that this is going to be a good one to do. So
Yeah, I appreciate everyone spending the journey with us, confirming what my thought.
Yeah. Who has questions on this so far? Anybody?
Well, I was sitting here like trying to figure out what is this 1% rule he keeps talking about. Then you were going over the cost per door and assuming that you can get 1% of the rent from that.
Yep.
So like, oh my gosh, it all makes sense. Like I just had that aha moment.
Yeah, and so that is a very quick napkin test. If you can look at a property and say, okay, well, you take the total purchase price divided by the number of doors, you get your cost per door, and then you know what you're getting for rent, then you're pretty close on the 1% rule, right? That is a quick napkin test, or should I say iPhone test? Everybody's going to do it on their phone anyway, but yeah.
Yeah, looking at this reminds me of what I need to continue to remind myself of, that don't fall in love with the property, fall in love with the deal. Like you actually
Yeah.
running the numbers and yeah.
Yeah.
But I tend to fall in love with the property and then I look at the deal and I'm like, dang it. But I'm getting better. I'm getting better.
That's good. And talk about self-awareness that you have about that. The first couple properties, well, I take that back. The properties and there have been 2 of them that we lost money on through our career as investors. I did exactly that, Cynthia. I fell in love with a property and I didn't really pay attention to the deal. And I got so wrapped up into the emotions of, man, this is, you know what I mean? Like, I love this. I want to go after it. And in the back of my mind, what I was not paying attention to is, hey, I'm ignoring the numbers. Let me just focus on getting this property, acquiring this property. So it's huge self-awareness if you're already there. And so now, like when you're looking at stuff, like just now, you're like, doesn't hit my numbers. Throw it away, like go away from it. You know what I mean?
Would you buy if the numbers made sense in a rough area?
You cut up a little bit there. What if the numbers made sense? Would I buy
in a rough area?
In a rough area? Well, we used to, and we've got some properties now that are on that verge, in some of the, like in Mobile, we've got a 4-plex and I can tell like, folks who live there, I can tell them what street it's on and they're like, oh, so you're in the hood. I'm like, no, I'm not. I know that. I mean, because it's a really long road, right? And the first few blocks of that road is right downtown, really beautiful properties and whatnot. And then right past our property, a couple blocks, it starts getting pretty rough.
Okay.
And so it's kind of on the verge. If you can find a property that's going on, that's on that border, and part of us buying this is we felt like there was going to be some regentrification in that area, and we're going to kind of ride that tailwind of folks coming in and redoing properties. We've done that once. We did really, really well at it. And so to answer your question, maybe, right circumstances, maybe, but Hannah says she buys in low income areas. Yeah, the biggest thing is safety. I would say safety for your tenants. And if you self-manage, do you want to be going to those properties yourself? We used to own properties that now, I'm not like well, how am I going to say this? I don't carry a pistol everywhere I go. but I used to, when I went to a couple properties that we used to have, like I made sure I had it with me, you know, and so yeah, I'm with Hannah. If I can't go and visit it, or if I can't take my kids with me, then it's probably a no, you know. We had to change the tenants in the park to get rid of the gangs. Wow. Yeah. Good question though, Grant. What about you? You buying rough areas?
Oh no, I'm brand new. I just made
Okay.
like my first LLC like a couple weeks ago. I really don't know what I know I want to be in multifamily, right? I really don't want to start off in single family. Not that I have a bias against it. I just like the stability that multifamily kind of comes with, just because you have more doors in one address.
Yeah.
But I don't know. I'm new to it. So when you reached out yesterday, I was like, oh my God, of course I'm gonna be there.
Oh, good. Glad you could make it. Yeah, we've done our best at I can probably stop sharing the screen. Our biggest, and this is why we're doing these underwriting calls, because our other than our Airbnb, our biggest net worth value creator, cash flow creator has been these small multifamilies, right? The 2 units up till about 20 units. Of course, she's calling right now. It's funny. Yeah, that's my tenant. We've got a problem going on, and she would call right now. Anyway, I have to call her back, or maybe I can message her while we're talking.
I'm not sure why I have to call her back for the passive investment here, but okay.
Well, we recently took over self-management of 20 of our units, and it was because we found out that our property manager was stealing from us, and so it's been an interesting last 6 months. I got to tour one of the units that I haven't been in even since we bought it, which was about 4 years ago, and I'm embarrassed to know that is a property I own because of how what it looked like. I mean, it was really bad. So that's one of those tenants, and here she is again. I know what it's about, but anyway, what other questions do you guys have? Somebody throw me a lifeline here why I'm gonna message her.
Where do we find properties that do work?
Well, I'm horrible at it. I will say that. And so where I found our last couple of deals is through potential partners and through realtors, and just talking to them, but continuing to talk to them. You know, every time I talk to a new realtor, they put me on their list and they email me everything that's on there. And I get so frustrated with that. I was like, we just spent like 30 minutes going over where we want to look, what we want to look at. But it does take some time to train them, right? And I have to accept that they get paid on commission. That's how they make money for their family, right? And so, you know, I have to accept sorry.
Well, I'll jump in and I'll share where I find my good deals. So every single one of my deals I have found through just telling people what I'm looking for. So whether that is a realtor that, I mean, I can't remember. I think it was like on Bigger Pockets or something. Someone said you need to be very specific on exactly what it is that you want. And so I would just, anyone I encounter in the real estate space, whether that's at meetups, whether that was realtors, whether that's wholesalers, anyone that I knew, even in the mastermind I shared. So I got a mobile home park deal through Victor, who sent it to me because in the mastermind I kept talking about what I wanted. He was investing in Florida, not in that area at least. And so I got one of the deals that way. I got deals from wholesalers in my area just because I continue to tell them that, hey, I'm still looking for this property. This is exactly what I want. This is what I'm willing to pay. And eventually those came through. Our very first single family houses, when we were buying them, living in them, fixing them, buying another one, right? Those came from all the same realtor that she was like the only one that didn't laugh at us because I was what, 20, I think, at the time. And I had these dreams of having all these rentals. And she was like the only person that wasn't like, okay, you know, you guys are crazy. You're way young and have like no money. And I was like, no, I'll serve at some tables at Chili's. Like, I'm gonna make the money for the down payment. And she found us houses exactly that we needed, that were inexpensive, that were livable for us, and just needed like little cosmetic things that we could do ourselves while we lived there. So it's just, I mean, whether it's speaking it into existence or just tell everyone what you're looking for.
Yeah, you gotta start talking it. And I'll tell you the flip side of that story is we've worked with realtors who finally came to us after, you know, working with them for a couple of months. They just said, look, we're not used to working with investors like you. It's probably best if you go use somebody else. And I'm like, fair enough. Thank you for not wasting any more of my time. And here's the thing. We because of that, we ended up working with a guy who has now closed over 15 transactions with us. And he calls me Mr. Lowball because he knows, like, for example, we were talking, you know, this was in the chat. Nick was talking to Jack about, hey, make an offer for 2.1. And so I used to, if I underwrote a deal, the reward to myself would be to make an offer, right? It would just go ahead and just make an offer on the property, submit an LOI or whatnot. A lot of times though, I was first at bat. And so that would kind of turn off the buyer a little bit, because I don't care what the asking price is, like 4 million, I would go in at 2.1. You know, if I took this to our spreadsheet and said, okay, now I'm going to use this and I'm going to have to bring some partners on to get the equity into it. I think there's probably going to be some capital expenses up front to beautify the outside of it, to maybe get, you know, some of those higher rents. And I would go through that process. And when I went through that process, I would submit an LOI. And this last June, we've now started targeting like tertiary markets. So here's one thing that we found, like tertiary markets around here. If I said Atmore, Alabama, probably none of you know where that is, but it's about an hour from hour and some change from where I sit. And we have a really good operating now that we've got it out of our property managers, our professional property managers' hands. We have a 16 unit that does very, very well. But we were able to get it because none of the big players are going to go there. Nobody's going to really, you know, like it's true. It truly was a mom and pop. They were just tired landlords. They actually built the things 20 years ago and they were just tired of it. And so we got them at a reasonable price, and we're now executing our plan. Right. And so it comes down to building those relationships and speaking it into existence, like Hannah says. Thank y'all for filling the airways there while I was trying to take care of something.
You guys said the hard work way. I'm looking for the easy straight way.
It does take some time. Yeah, it does.
Get rich quick.
Yeah. And you know, a lot of folks on social media, they'll make you feel that way, right? They'll make you feel that it is a get rich quick kind of deal, but it's not. And one of the guys who's now a partner of mine, he taught me this kind of trick. And then later I picked up the book. It's called Lead Generate by Scott Groves. But he still has his W-2, and he takes his lunch hour, and he takes about 30 minutes from his lunch hour, and he makes phone calls. He just calls brokers, realtors, anybody he talks to. Matter of fact, he brought us the 16 unit. We partnered on it. That deal derived from a weekend. He was at a hunting camp with some buddies. None of them invested. None of them whatsoever have ever bought a property, but he got to talking about, hey, I want to do this. I'm doing this. You know, I'm looking for this. And somebody at the camp knew somebody, made an introduction, and then it happened. You know, so it's you just continue to have the conversation. So if you want to put some numbers around it, what I try to do is I make 2 quality contacts a day or connections a day. Ballpark deal. What is ballpark deal? You're on mute. You're on mute.
It's an app for the iPhone.
Okay.
Yes, I was trying to search for it. Sorry, I didn't mean to interrupt you, Jay. I was thinking, I just wanted to make sure Nick saw it because I couldn't find it.
Oh,
That's
really?
all.
Let me see if I can find it.
Okay, but keep going, Jay. Sorry
No,
about
that's
that.
good. That's good. No, you really just got to keep having conversations, right? And you eventually one's going to fall, and then you're going to get a deal, and you're like, all right, now what I do, which is good. It's good. All right. So everybody, the exercise we were having earlier, growth friends versus maintenance relationships. If you were heavy on the maintenance relationship side, you got to make a change, right? If you want to start growing, like I have this conversation with a lot of people who want to come into the mastermind. They say, hey, I'm struggling to grow. I'm not around. I don't have anybody that I can talk to about this stuff. And we kind of go through this exercise as well. Let's just kind of put this in real context, right? And I go through this exercise with them, and what they end up with is a sheet of paper that on one side of it is heavy on maintenance relationships, and they may have one or two growth friends. I was like, so you're spending your time with these people and you're expecting to grow. And they're like, got it. And so that's where the mastermind comes in. A mastermind doesn't necessarily have to be the W2 Capitalist mastermind, but make sure you're plugging yourself into and you're having more conversations with growth friends than people that are maintenance relationships. And by no means do I recommend that you go tell all your maintenance relationships to go pound the pavement, to go, hit the dirt. It's not what I'm talking about. If you fill up your calendar with growth friend relationships, you're going to have less and less time for those maintenance relationships, and they're going to fall off. Now, some of those we can't get rid of, right? They could be they could be spouses in some case. I'm lucky not to have a spouse that's a maintenance relationship. She's definitely a growth friend. I do have parents who fall into the maintenance relationships. But it's because I'm doing weird stuff, right? Like not working a normal job and just investing in real estate and hosting the W2 Capitalists. That's it. That's they don't understand, and that's okay. So I want to encourage you, if you're heavy on the maintenance relationships, look for a mastermind, look for a community, look for a local RIA, get plugged in and join it, right? And make sure you find the right one for you. Okay. Any other questions on what we did today? No. Dre, let's give away some prizes. I have no idea what we're going to give away yet. Do you have everybody? I should have asked you this at the beginning. Do you have everybody's name in the wheel of names?
Yeah, we have like 14 attendees
Okay.
when it started, but right now we've only have 10, so I put in the 10 names.
Okay.
That's left.
Share your screen, and we're going to give away. I'm going to come up while you're sharing your screen and we do this. I'm going to come up with something that we're going to give away. I don't know what it is.
Yeah, can you see my screen?
You got it. All right. Click to spin. Again, we gotta get the music going, right?
But I don't know how to put in music, so
That's all right.
sorry.
That's all right.
Don't stress her out, Jay. Next time.
Next time.
Yeah.
All right, Dre, let's go ahead and spin it. Just click on it. It should kick off. And this one, so here's what we're gonna do. We're gonna do a grab bag. We've got Eric Smith. That landed on Eric. All right. Eric, you have your choice. I've got three things. I've got a W2 Capitalist swag bag. I've got a membership to a DEALCHECK, which is a lifetime membership, so you don't have to pay for it at all, or a $100 Amazon gift card. You choose.
Let me think on it a sec.
Amazon gift card.
Okay.
I thought you'd say that. I thought you'd say that. All right, let's spin it one more time. Let's give something else away. We got the W2 Capitalist swag bag, and then we've got the deal check, lifetime access to deal check. Is it going to be Dustin or is it going to be Nick? Dustin, are you still here? You still with us?
Yeah, I'm still here.
Congratulations, sir. Which one would you like? You want the W2 Capitalist swag bag or lifetime access to deal check?
Let's go with deal check.
All right. I will email you that card. I'm not going to do what I did last week and flash them up here and it's got the activation code on it. I'm not going to do that again. I'll email you the how to do that and instructions for all that stuff. Thank you, Dre. Thank you for doing that. Sorry. Cynthia's got your back, by the way. All right. So y'all, we're going to do this next week. Jack, thank you for bringing a deal for us to look at and underwrite and allowing us the opportunity to make sure that you're not crazy in your underwriting ordeal. So yeah, that's good luck to that seller. Maybe he finds the right buyer, right? I don't know.
My pleasure.
Yeah. Yeah. And so here's the thing too. And I get kind of, I've been frustrated with this, but then I kind of realize that not everybody has the same investing criteria. Not everybody has the same, investing criteria, because there could be folks out there with 1031 exchange money that are willing to lose $5,000 a month. I don't know who these people are, but I'm not one of them, but they're willing to lose $5,000 a month until they can get those rents up. Right. Just so, because that's a less expensive hit to their 1031 exchange money versus if they just paid the penalty and paid the fees, right? Or penalties.
It's funny you say that. Whenever I see it says 1031, great for a 1031 buyer, you just click next.
Next.
Yeah.
Pass. All right, y'all. Thank you all for being here. Dustin, I'm going to email you. I'm going to make a note of that, as well as Eric. And hopefully I will see y'all all next week. All right.
Thanks, Jay.
Bet. See you guys.
Have a great week. Bye-bye.